buyer segment, if that gets saturated, then there is a recession because there is oversupply. Like Noida, there was oversupply of that middle class segment, and middle class homes were the easy to make rather than a affordable or a rich premium.
To a larger extent, because of all the policies of our last 5 years, you have seen a lot of companies setting up their shops in the country.
Compared to most of the countries where the tariffs have been put, India is much more better in a condition in the whole of Asia or the rest of the world as well.
More and more supply coming in for our industry is actually good, because this particular market, specifically office space and commercial space, has always been supply short.
Trade wars. The era that we are living in, we see multiple disruptions coming our way. This is something that wasn't seen 2 years ago. No one planned it, no one put it in their business plan, and no one really thought about what could be a plan B, plan C to tackle this kind of a challenge that is something which is a reality right now. I do not need to tell you about what's ensuing over there because you have been reading a lot about it, hearing a lot about it. What we'll do is we'll try to decode it in the context of real estate. Being a consumer, an investor, or an end user of real estate, you would want to understand how it could potentially impact the decisions that you may or may not want to take. We will try to help you out there. And that's the purpose of today's discussion. Namaskar, I'm Prasoon Kumar and you're watching this new episode of The Property Show on MBTV, world's largest real estate online channel. To discuss this, we have got a stellar panel today from different walks of real estate. We have got Mr. Amoj Tewatia in studio. He is founding partner of Design Forum International and architect by profession. We have Mr. Ashit Verma, who's founder of Hanto Workspace based out of Bengaluru. We are also joined by Mr. Jatin Shah, who's Chief Strategy Officer at Colliers India, and with Professor Dr. Aman Agarwal, who's Director and Professor at Indian Institute of Finance. Welcome, everyone. So, as the topic suggests, the idea is today to decode the ensuing trade war in the context of real estate. Let's start with you, Anuj. What do you think could be an immediate implication of this on the construction activities per se, or would there be any?
I think there is a disruption in the market, disruption at the global level. But you know, any change in the equilibrium that generates some different set of outputs. So what is going to happen now? There are two things which is important to discuss today. One is the tariff policy. Second is the immigration policy also, how these two are going to impact Indian real estate scenario. So if we see the very first one, the tariff which, you know, I mean, US has raised the tariff of 245% to China. China being the major manufacturing base for all kind of construction materials. Primarily, steel is the major item. China and South Korea, they are the major, largest steel producers. So there will be a discomfort in exporting steel to US from these two countries or other countries also. But from Indian real estate market, I think there will be more inflow of steel because there will be kind of dumping also here. Although
so cheaper steel could come here.
Yes, lot of, our real estate market or the construction industry will be flooded with this steel and other construction materials also. Which is going to help in a way that our manufacturers will also become more competitive. So I think there is a lot of, provision or margins to make it more efficient productions. So right now, the steel prices have gone really, really high. So I think there will be a correction in the steel prices, which is going to impact really, really very good in lowering the construction cost, which in any case will be impacting positively Indian real estate scenario.
Okay, that's quite interesting. Dr. Agarwal, your take on this, the entire US-China scenario benefiting India, across sectors is something that has been spoken about, but specifically in construction because of cheaper steel or other raw material coming in India. Do you think this is likely to therefore reduce cost of construction?
You see, as far as the tariffs being discussed and raised by Trump, a 10% base tariff is being put on everybody. So it's not something which is put on us on specific. Secondly, as compared to most of the countries where the tariffs have been put, India is much more better in a condition in the whole of Asia or the rest of the world as well. Thirdly, the tariffs which are being imposed are on commodities, which are something like drugs, precious stones, ready-made garments, telecommunication instruments, where the demand is inelastic in nature. It is something like a cigarette. When a tax is levied on cigarette, you may say that you may not smoke for a day or two, but then you come down to the same consumption little later, because these are kind of Veblen goods where the demand is inelastic in nature. So whenever these kind of goods where the demand is inelastic in nature, when taxes of such nature are raised, it becomes a cost to their own nation more than the other nation. Secondly, in the past, it has been seen very categorically when trades and tariffs are produced, and specifically when WTO was also there. Two of the ways which have been used by industrialists in the past in terms to overcome this particular factor is one is over invoicing and under invoicing of bills, which in certain countries is illegal, including India. But it is the right of the consumer producer to produce and sell the product at its price. Second is the use of transfer pricing as a mechanism, which has been used even when Obama was in power. Large number of companies which were sourcing goods and services from countries like India were told not to source from outside but take it from United States. And many companies henceforth, then they told their vendors who were supplying them that you actually open a small shop office in United States, in some part of United States, wherever you want, and you do your transfer pricing based on your product, and we will buy from you. So at least we could tell the US government that we are actually procuring from the American soil and not from overseas. So there have been means and mechanisms to actually outrun this tariff kind of a structure which is there. But as I have said, this tariff hurts United States most as of now, because most of the products they import are consumer-based products. You see, when it comes to even real estate and construction, someone who is willing to spend 1 crore will be willing to spend 1 crore 10 lakhs also. So that marginal difference which may come because of trade and tariff which may be there. Secondly, we are not importing iron and steel to such a great extent that it will be impacting so much. Large part of the consumption of iron and steel and most of the materials used in construction, whether it is fly ash for making bricks or other things, comes from domestic markets, from the nuclear plants within the country and not from outside per se. Most of the steel which is also being utilized comes from within the country than from outside. So as a matter of fact, most of the consumption items which are coming from within and not from outside. So even if the price gets raised for some reason, let us say an American company who is running a construction firm here or is importing certain kind of services and they raise the tariff, it will be a marginal impact on the total product which is being priced to a consumer, which is not going to make such a major effect, because someone who is willing to spend, let us say 2 crores, 3 crores, 1 crore, for him, 4, 5, 10 lakhs difference will not make a difference. But someone who is only buying a house for 10 lakhs, which is the houses which government of India sells, like the HIG or the MIG or LIG kind of houses, there, even if 50,000 is increased, it makes a huge difference to the consumption pattern. But in the other real estate market, it doesn't make so much of a difference. And to my effect, there would not be much of an impact of the trade and tariff. Secondly, this impact will come after a quarter, because all products and services are not bought on a day-to-day basis. They are bought in a bulk for a certain period. They're contracted out. That contract changes.
So there'll be deferred impact, fair enough. And you do have a different view on this. Jatin, from your perspective, therefore, the impact on construction because of maybe on one side, say, cheaper raw material, coming from China, because China will not be able to export to US and therefore it will look for other markets per se. Is that a situation we can take advantage of, and will that help therefore?
I think I'll just second Professor Aman brought in and articulated it very well. The point here is that if I help you to break down a residential construction cost, right, which is say about 2.5 to 3,000 rupees a square foot, your 1,500 rupees is structure cost, right? And that is primarily the steel and concrete and brickwork, and which is all, as Professor also articulated, is being from the country, right? Right now, balance is what? Balance is your windows, which is UPVC windows, your painting, your tiling, and your bath and fittings, right? They are all also, to a larger extent, because of all the policies of our last 5 years, you have seen a lot of companies setting up their shops in the country. Okay. Most of the goods are manufactured within the country and consumed within the country, right? Now, there are areas like if I'm doing a very high-end house, very high-end house, I might buy kitchens, I might buy furnitures from Italy or from China or some artifacts or some sculptures or some specialized light fixtures. But the proportion of that, of if I take a 3,000 rupees as a bracket,
That's a fairly
the
small
proportion
one.
of that will be only about 5% or 6%. Now, what will be that impact because of tariff? Sure. Is not very significant, right? So these are my views around it. Yes, there is going to be another impact of this tariffs on the how the sale velocity of the residential house will move, because a lot of these investments will now start coming down. You already seen a 24 to 30% drop in the large, about 8 to 9 cities in the first quarter itself, which I'm saying Jan, Feb, March, April, right? You have seen the 24% downside on the sales velocity of the residential apartments across these 9 cities. So that might be an impact, because now some investments of some investors or the bulk users or someone who's buying a second, third home might pull it back. But again, this is just the first quarter.
Staying with the construction and the supply side economics of it, really, the trade war, there are, as you rightly pointed out, raw materials and other units that go into construction of residential real estate primarily we are mostly self-dependent today, right? Because of policies and everything, we are insulated from any such impact that is largely going to happen, right? But is there a lost opportunity there, therefore, right? That if you could have tapped this situation and got cheaper products.
So largely, if you see, Prasun, that over the 4 5 years back or 3 4 years back, a lot of these tiles used to be imported from China, right? Because they were bulk producers of tiles. The light fixtures, for that example, were used to be imported from China and assembled in country to, right, to get away with the policies of the government of India. So tile was one point. You had chiller systems in case someone is doing a air conditioning and it's a large apartment. You can have chillers coming in from there. You can have elevators coming in from China. You could have tiles coming in from China. You could have doors and windows also coming from China or Vietnam or Thailand or Southeast Asia, right? So those geographically over the last 3 4 years, as I mentioned you, the demand of those imports have come down quite a lot, is my understanding of this market. There is a little bit of demand, but that has been also because of the increased the cost of transportation, the increased cost of the taxes and levies and anti-dumping duties, etc., has led to the emergence of local markets becoming more self-sufficient. Yes, they will be. I accept your point that there will be significant, there will be some impact, but that's not going to be very significant, is my take.
All right, Ashit, what's your perspective on this?
I think I do resonate with other folks over here on the panel, but I have a few directions which I want to share, like especially related to the dumping of most of these raw materials, which can happen, right? Like, and there is something which is not so straightforward because most of these sources may not directly be from the countries of origination. It can be from different sources also.
It can come from Vietnam, for example. Yeah.
Exactly. So it can be Vietnam, it can be UAE. I think UAE is also emerging as a key, source for such supply chain for different countries. And so that is something I think we need to be really cognizant about.
I think there is more or less a kind of a consensus that the impact may not be as direct and as much as to benefit end consumer per se, with a maybe a price relief in a sense through cost of construction.
Add one more point here. as Jatin has said and Professor Aman has said, that most of the construction materials, we are self-reliant. We are producing here. We are not importing steel from China right now. So let's say, take an example of 15 years back. We were self-reliant, or rather producing all cupboards, kitchen, curtains and construction materials here in India only. Still people were venturing out to China to buy a same cupboard at a cheaper price. You know, it is, today we are not importing, but when there will be a flooding of the construction materials or steel available in the global market, our real estate construction developers or the construction agencies, they will have a choice to buy steel from Tesco or to buy steel from South Korea, which is cheaper. Right now, for the aluminium formwork, we have options like Maiwan is there, Kongyong is there, MFS is here. We have options. It is not that what is available here. We are manufacturing aluminium formwork here. That does not mean that our real estate developers or construction agencies will buy that only. It will depend what choices are there, what is the price sensitivity for them, where will they go. So those forces will drive the construction cost.
Staying on this, new supply. Let's talk about that, right? New supply is coming in, therefore, and while it doesn't happen overnight, and it's a long haul process, and therefore the impact may not be immediate. But do you think sentimentally there could be an impact on the scale of supplies coming, in the market, or is that completely isolated from these kind of developments?
I think supply always follow the demand. And what we call as the recession, I think there is no recession. It is oversupply. And we, especially North India, we tend to follow, what people are doing it. I mean, if let's say there was an affordable housing boom, so every developer was going for that. Right now, after DLF has sold Privana at some
there's a premium housing boom.
Premium housing, I mean, everybody is flooding that market with that premium thing. There are, limited buyers for that.
Okay.
And that buyer segment, if that gets saturated, then there is a recession because there is oversupply. Like in Noida, there was oversupply of that middle class segment. And middle class homes were the easy to make rather than a affordable or a rich premium. So, I mean, it is going to be impacted by the demand.
Okay.
Demand will depend upon what the other forces which are going to disrupt the economy of India, which, like this tariff policy, is going to disrupt entire IT industry.
So we'll come to that. We'll come to that, and fair point you make that it's demand which drives supply, but in real estate, often supply also creates its own demand. That's also one of the aspects of it. Professor Agarwal, the entire funding. I'm going to just want to look at that aspect of supply. The entire funding of the supply side economics, and where is the money going to come from, and so on and so forth. With maybe investors or large scale investment firms getting cold feet or holding on to the decision for a moment, do you think that may have an impact?
You see, when you talk about real estate sector in specific, the supply and demand principles don't really follow in particular. And the reason is that we have seen in the past that real estate, and even today, as a matter of fact, is one of the most important investment vehicles globally. When we look of 90s or 80s or even early 90s, the factor was that we were looking at a person buying a house for consumption purpose only. And mostly they will buy when they were at the stage of retirement, not at the stage of beginning a job. Today, many of our students, when they take up a job within a span of 6 months, they approach a bank or a financial institution or a microfinancing institution, and they go forward buying a house. Not one house, at times within a span of 2 to 3 years, 2-3 houses, where one is another is meant for investment purpose. So the concept of supply here, the demand is getting artificially created because of the factor that real estate is giving extensive return, which is actually again not a reality. So one is ending up buying a lot of real estate and holding on to it. So the concept of supply and demand doesn't work, which is based on basic consumption and investment purpose, not purely on investment basis.
Okay. Jatin, I wanted to take this to you. See, the entire financing aspect of real estate, right? The supply side of the economics, right? And it's not only from perspective of residential real estate, but all largely from point of view of commercial real estate as well, where it's not really about you launching a project and picking up money from consumers, therefore constructing, etc. You do build supply, and then that caters to its own demand or creates its own demand. So a large scale commercial real estate development, could it get impacted? Could there be a situation where finances become a little difficult to come by and manage, and therefore there could be some slowdown over there?
Yeah, you're right about that, Prasoon, that this definitely has put back the growth story by little bit of margins. I mentioned to you earlier during the discussion that the quarter one was not really good from a new launches perspective or the sale momentum perspective. And why is that happening? Because IT in the metropolitans like Hyderabad, Bangalore, to a larger extent, Gurgaon, have a specific impact on those IT trends. And if the IT trends move forward, it's followed by the residential trends also, right? Though you would still see that in Q1 also there was a large absorption of office spaces. The supply side on the commercial spaces are also, there is a gap between supply and availability now. Yes. Specifically Bangalore leading the show. As early as only yesterday, TCS signed a very big deal with one of the largest developer in South India, right? They did a very very large deal of about 7 lakh square feet. So I would say the movements are there where people are still going ahead with signing of the deals and starting of the new projects and project launches happening. But the residential statistics are showcasing something different. So while the commercial statistics are showcasing that there is a demand for commercial segment picking up with GCCs coming up and opening up, but again the impact typically you would see happening after 2 quarters. It is not immediate, right? Because these decisions of taking up the spaces were made at least 6 months or 3 months prior.
Could there be an impact there? The question is 2 quarters down the line or a year down the line, if this continues, could there be impact in therefore supplies coming into the market and therefore issues, challenges happening there?
Yes, you will see the impact if this continues, and there is a freeze on the IT hiring, there is a freeze or there is a showdown in the market and people losing the jobs, etc., etc. You will see the commercial spaces starting getting vacated, and that impact coming on the residential segment also, and the buyouts happening. So these are the views around that. Just wanted to touch base also one smaller point for everyone here, that the and this is published by PropTech, right? Some of the statistics. And in Q1 2025, we had 80,774 units which came into the market, right? Against that, in last year, in 2024, the number was 1,22,365. So consequently, the numbers are coming down. So 1,22,000 versus 80,000. So this is a big gap on the.
Lot of that was also pent up, delayed, which was supposed to come to market and had been coming to market. So not sure that's apple to apple, but yeah. I do agree. In general, there seems to be a little bit of a slowdown over there, and we'll discuss that aspect as well. Ashit, co-working spaces anticipated by 2030, 1.26 million square feet of spaces going out in the market, and so on and so forth. What are the challenges you foresee because of this then?
More and more supply coming in for our industry is actually good. Whenever because this particular market, specifically office space and commercial space, has always been supply short. Because there are very less good infrastructure and supply available in the market. So in that way, if the supply pressure is out, there is a lot of price advantage which operators like us, and in fact any end consumer also can leverage. But coming to the point of the cost of capital, which you mentioned initially, I think I do see some impacts of these in projects which are particularly getting delayed, right? Like because the more time these projects are sitting with the developers, and the more cost they're paying for the capital over there, and ultimately it's operator like us or the end consumer who eventually end up paying these in the form of rents or security deposits. So while the large deals are definitely happening, I think Amazon also signed a pretty big campus recently here in Bangalore itself. But I'm yet to see a lot of supply will like for example absorbed to the extent which people were expecting actually. So there are there, but I don't see that momentum as of yet.
So, on the demand side, therefore, of course, this is also an asset class where sentiments play a big role, right? And the macroeconomic sentiments getting impacted because of all these wars going on and all these conversations happening around, that is sooner or later bound to impact the demand of all kind of different asset classes within real estate itself, right? Anuj, how do you see this? The demand really getting impacted in a big way because of all these changes that are happening, or you think that there's enough cushion within and there's enough elasticity within for us to be able to absorb this kind of a shock and not having much of an impact over a period of time?
I think real estate follows the overall industrial health of a country. In India, if we talk about, there are two segments. One is a tier 1 city and tier 2 cities, tier 2 or tier 3.
Sure.
This entire scenario, which the new policies of Trump is impacting the global environment, what we are going to see two changes. One is the disruption in the IT industry. And Indian metro cities' demand of the homes are primarily driven by the IT industry workforce. Now, if they are going to have face the heat of the recession, they will not be focusing on buying properties. So it is going to impact here. But there is another factor which is going to pump up, which is the immigration policy in US. Right now, because of uncertainty in immigration, in getting a H-1B visa for the NRIs, most of the NRIs, they are looking to a more stable investments. I mean, for their stable future life, it's India. So they are eyeing back to India, which is going to inflow, the NRI money here.
Sure.
If you see, and NRI money, NRIs are big buyers here.
Yeah,
I mean, if you take the example of Privana West, which we are doing as the architects there, 27% of the inventory is bought by the NRIs only.
Okay.
So there is going to be an inflow of the NRI money. There is going to be a slowdown from the IT workforce. So both these two factors are going to impact tier 1 cities.
Okay.
Now, tier 2 cities are going to face a positive growth. The reason being that most of the companies, they are shifting their manufacturing base from China to other countries. And India is also one of the primary beneficiary of that. Now, because of that, I mean, all the tier 2, tier 3 cities will see the growth in, setting up the manufacturing shops here. There'll be demand of jobs there, or rather the job creation in those cities. So it will follow the demand in the real estate homes also.
Yes.
Another thing, apart from the this demand in real estate, I mean, talking about the homes or commercial places, there is going to be a positive boost to industrial real estate sector also.
Okay.
Because, I mean, if Apple is shifting here the manufacturing base, a lot of allied industries are going to get affected in a positive way.
Yes.
So there is going to be a positive real estate environment for industrial real estate growth.
Okay.
Even warehousing in a say, because of the e-commerce and because the manufacturing will be here, so there'll be demand of a lot of warehousing. So I think warehousing, industrial parks, those are going to get the boost because of these policies.
Okay.
And because of this, tier 2, tier 3 cities are going to have a positive impact of these policies.
All right.
Tier 1 cities might face a mix of both.
Okay, so that's a positive lookout. Professor Agarwal, is demand also elastic vis-a-vis such policy level, kind of disruptions that happen?
Yeah, I have a mixed opinion here. First of all, when it comes to overseas demand shifting from China, we missed the train in COVID period. We would have got large number of companies come in from China because large number of countries had taken a decision to move their companies out from China after it was found that the coronavirus had its origin from China. You'll be shocked to know Chandu is a city which has houses about 254 MNCs from world over in China itself. It's a small city in the center of China. I have been fortunately been invited by the Ministry of Commerce and Ministry of Foreign Affairs in China to address their delegations multiple times. And I have had the opportunity to visit the city as well as meet MSMEs and others during my course of visits. And it was shocking to note that we are lagging behind in terms of actually having some of these companies present here to do their shop work and function. Although we have had large number of companies like Dalmia Chrysler, Tetra Pak and others taking away markets and creating markets here as well. Even some of the foreign companies in real estate are doing that as well.
So you're saying while opportunity is there, it may not realize, is what you're saying.
Secondly, the real estate demand might spur a little bit given the RBI and the government stand of reducing the interest rates recently. 2 times they have done it. Yeah. Although it is contrary to the economic requirement which they have done, but they are trying to boost up the consumption patterns, and those consumption patterns will lead to some results in terms of real estate boosts, specifically when it comes to housing segment, which is looking at lower middle class, and upper middle class, not the richer segment as such. Given this Trump tariff war which is happening, there would be further reduction in real estate activities, primarily because a lot of money which gets invested into real estate is coming from overseas markets and overseas companies today in the real estate, and not from domestic banks and financial institutions. I'm not talking of you and me buying a house and taking a loan. I'm talking of projects being financed by companies. And we have seen this incidents in the last 10 years in the UAE zone. You can go and look at the historical downfall of the UAE real estate market, both in commercial and real estate home segments, which is outfall of the overinvestment the sheikhs have done in real estate, looking at the oil prices going up tremendously high when they touch roughly $200 a barrel, also $80 a barrel, also going $160, $175 a barrel, going up, thinking that it will touch $200 a barrel. So they actually pledged their next 20 years of expected cash flows and took extensive loans from global markets. As of today, real estate companies in India, including large companies which are prominent names, are overexposing their own finances in terms of building it up, thinking that people will be buying out of investment mode, which is actually today going towards gold, given the steep rise which has happened, as against real estate, which has happened in the last 15 years.
How do you see demand getting impacted in the space that you operate in, which is co-working space?
So I think, it's an exciting time for us, honestly. Because whenever there is a flux and predictability, people want more flexibility, I think. And in recent time, I think we have seen that in our demand portfolio sales pipeline as well, honestly. Like we have been talking to very, very large companies, which earlier we didn't even thought that they would be coming to us and talking, right? Like, and these are pretty large companies, like they are like $2 billion companies and traditional companies also, which existed like 10 years, 15 years in their entire tenure. And now they're seeking flexibility. So that we were really surprised, like, okay, now their thought process and future planning are all getting impacted because of the flux which is happening globally. And so in that way, I think we are here to add a lot of value in the market in that way. But along with that, just as a highlight note and as a caution, I think such kind of intermediary demand needs to be supported with a long-term growth as well, right? Like I think we were talking about manufacturing companies coming up, and a lot of infrastructure play, which brings in more companies to set up their shop over here. I think these, along with this temporary flux, we need to be mindful of the long-term growth as well. So that is where I think we need to sort of strategize as from the government point of view, and also as companies who are coming up over it.
Okay, so there it is, viewers. The supply side of real estate is not likely to see a lot of impact because of the ongoing tariff volatility. The demand could get impacted though, because that's very sentimental and sentiment driven. However, how the story will unfold, we'll see over the next few quarters, and the picture will become clear. Till then, keep watching MBTV. We'll keep coming back to you with such informative shows so that you can take a meaningful decision. Thank you.